A single piece of legislation can change everything. In early 2024, California lawmakers passed a landmark bill. It was called the Responsible Innovation and Safe Harbor Act. The law wasn't designed to stifle artificial intelligence. Instead, it aimed to accelerate it responsibly. It created a safe harbor for AI startups, a clear, predictable legal framework for companies developing new AI technologies. They would be protected from certain types of litigation, provided they adhered to strict ethical guidelines and maintained transparency standards. Before this, the legal landscape was a minefield of uncertainty, data privacy, algorithmic bias, and unforeseen consequences. The impact was immediate and seismic. The law lowered the risk profile for early-stage AI. Venture capitalists suddenly saw a green light. Ambiguity dissipated. Founders no longer had to budget for massive legal battles. They could focus on building and scaling. California signaled it would be a partner in responsible growth. The clarity acted as a catalyst, drawing a roadmap for ethical AI development. The result, a floodgate of capital pouring into the next generation of AI pioneers. The numbers paint a startlingly clear picture. Before the act was signed in March 2024, funding for California AI startups was healthy, averaging around $4 billion per quarter in 2023. Then, in Q2 2024, investment skyrocketed to over $9.5 billion, a jump of more than 137%. The momentum continued. Q3 reached a record $11.2 billion, concentrated in AI while other tech grew modestly. In the 6 months pre-law, about 150 AI startups secured seed and Series A. Post-law, that surged to over 350. Average seed rounds jumped from roughly 2 million to nearly 4.5 million. Analysts connected the dots. A CB Insights report titled California's AI Renaissance linked the frenzy to regulatory clarity unlike anything since the early internet. Investors stopped holding back. With clear rules and stable goalposts, pent-up capital rushed in. The charts tell the story of a market unchained. The beneficiaries are a new class of ambitious AI startups. Cognito Health San Francisco builds an AI platform to predict early-onset Alzheimer's using linguistic patterns from patient interviews. Before the law, its Series A stalled over privacy risks. 2 months post-law, it closed $40 million, led by Andreessen Horowitz, citing new health data protections. Forge Robotics, Palo Alto, builds autonomous last-mile delivery robots. The issue wasn't tech, it was liability on public sidewalks. The act set clear, operational, and safety reporting standards. In August 2024, Forge raised $65 million led by Sequoia to scale and pilot in San Diego and San Jose. Synth Media, Los Angeles, built a generative AI for pre-visualization and storyboards, closing a $25 million seed from Lightspeed after IP ownership clarity. These are the tip of the iceberg, from AI financial compliance to agritech optimizing yields. The law removed the thorns of legal uncertainty. With the Safe Harbor Act as sunlight and water, a forest of AI companies is sprouting across California. To understand the gold rush, listen to the prospectors. Sarah Tavel of Benchmark said investing felt like a race where rules changed mid-lap. The California law gave a stable, predictable track. We now know what compliance looks like, letting investors focus on tech merit and founding teams. Predictability is a currency. This law printed a lot of it. Roloff Botha of Sequoia echoed, "We're looking for transformative companies and must mitigate risk." The act de-risks the regulatory side. A clear compliance path is a powerful signal. Clarity lets firms move faster with conviction on deals they might have passed on. Investors now see compliance as a feature. Vinod Khosla called the law a filter for quality. Companies embracing ethics from day one build more robust businesses. Trust and safety as core elements, not afterthoughts. It isn't just about avoiding lawsuits, it's about building companies customers and society can trust. That is where long-term value lies. The consensus: the law altered the calculus, the training wheels are off, and the race is on. While the investment wave lifts all AI boats, some are rising faster. Capital concentrates where impact is immediate and profound. Unsurprisingly, healthcare, financial technology, and advanced robotics attract the lion's share. Complex data, high stakes, and massive efficiency gains make them prime for disruption now that rules are clearer. In fintech, AI spans fraud detection to personalized planning, analyzing millions of transactions in real time. Fortify Financial raised $50 million to build dynamic bank compliance models. The act assured sensitive data use, boosting investor confidence. Robotics funding now targets delicate tasks. AI surgical assistance, precision agriculture, autonomous construction, enabled by clear liability standards. Healthcare, finance, and robotics form the vanguard. Legal clarity unlocked vaults of capital for these high-impact domains. No sector has been more profoundly impacted than healthcare, diagnostics, treatment, and drug discovery. Progress was hampered by privacy rules like HIPAA and life-or-death liability. The Act addressed these directly. It set protocols for ethical use of anonymized data and standards for accuracy and fairness in diagnostic algorithms. Result: a Cambrian explosion of healthcare AI startups. Aura Diagnostics secured $75 million to detect multiple cancers from a single blood test. Compliance and validation drove fundraising success. Capital is funding costly clinical trials once out of reach. Gene AI raised $55 million to power personalized care, moving beyond one-size-fits-all medicine. Tools for faster, more accurate diagnoses, simulated drug discovery, and outbreak prediction are now accelerating under safer, clearer rules. This surge, catalyzed by a single bill, is not a momentary boom. It reshapes the decade ahead. With billions flowing, timelines compress. What took 10 years may now take 3 or 4. Every facet of life will feel it, from how we work and heal to how we are entertained and educated. California becomes the epicenter, pro-innovation and pro-safety, a magnet for talent and capital, fueling a virtuous cycle. Others will borrow the blueprint. But acceleration brings challenges. Ethics, oversight, and public trust must keep pace. The Act is a strong foundation, not the final word. As tech evolves, so must regulation, through ongoing dialogue. This flood of investment is a vote of confidence in tech solving our biggest problems, trepidation yielding to ambition. The Safe Harbor Act did not create AI, but it unlocked its potential, lit the fuse, and set in motion the world of tomorrow.